topic. Let me move that banner as well. Okay, today's topic is on cryptocurrencies, blockchain, Bitcoin, and lower risk trading. Okay, obviously this is all caveated with some financial information, but obviously risks with going online with these things. But of course, the great thing is it's also a very exciting world out there. So we're going to be talking about that today. I'll summarize a little bit more about what that's about in a moment. And just a little bit of an introduction about ourselves, first of all. And in terms of engaging with each other, it really is about, through Business Growth Bureau, building valued connections based on a deep relationship of trust. A number of you have joined us already this afternoon, so do reach out to each other as well. It is all about building relationships, building trust, and collaborating as far as this is all concerned. And in terms of what we specialize in helping our clients to get their strategies right, tied in with their key numbers, also work with them to help themselves build on their value and brand proposition, what strategies they can put in place to amplify their brand. And that's a really big place, actually, because you can really get your message out there through a number of different channels simultaneously, if possible. Then, of course, that really helps you to grow. And then underpinning all of this, you've got the social selling blueprint, which is all your class as lead generation, prospect nurturing, sales optimization. And then finally, the most important part, of course, is your existing customers. You need to surprise and delight those so they want to keep on interacting with you, recommend you. And of course, some of those clients, if you look after them the right way, will come back and spend more money with you. So let's come down to yourselves. Again, a number of you have already introduced yourself. So tell us what you're a little bit passionate about. That doesn't necessarily always have to be about work. What you're passionate about personally is already good. You know, what really motivates you, what drives you, and why you do it. And also be bold with your questions. So we're expecting some big questions today. And Jonathan's a fantastic resource of knowledge and expertise for this. We're very much here to support you in your journey. And we recognize that running a business can be a very lonely place, whether you're a company of one or a company of 1,000. And if you enjoy these sessions, then do feel you can set a reminder on Facebook and do share this if you enjoy it. And we'll leave you to decide whether you like it or not. And equally, you can subscribe. And a quick intro from myself. I founded Business Growth Bureau about 7 years ago. Very much believe in the importance of what I class as circular relationships, where everyone wins from that relationship. And so what we're not talking about here is just a straight win-win, because invariably, if you're dealing with a larger company versus a micro company, a lot of cheap talk is done around this. And in reality, the larger company tends to think they've got the upper hand. So we tend to like to feel that everyone's really important. All the relationships are important. And if you make everyone feel valued, then they, of course, want to interact with you. Miro, do you want to give a very quick introduction about yourself, if that's okay?
I've been working with Rupert for many years now. And my passion really is seeing people succeed in whatever they choose. I love working with people and building relationships. And that's what I really enjoy doing.
Lovely. Thank you very much, Miro. That's very nicely succinct as well. So thank you for that. And we got the lovely Jonathan Price. So a very suave-looking Jonathan there.
Yes.
So tell us in a minute or two, Jonathan, a little bit about your background, what really drives you, because I notice you do quite a bit of charitable work as well as being also very clever in a whole range of different fields. And really interested to know a lot more about you.
Yeah, thank you. I just had to leave a charity board meeting to come in to talk to you on time. So yeah, right. Well, I started off as a lawyer, qualified as a barrister many years ago, and then after I'd qualified in law, I got rather interested in finance. So I got myself a job in the city and got myself qualified in finance as well. And since then, I've sort of had a foot in each camp. I won't tell you much about my career because I've done too many different things. But at the moment, I spend about half of my time teaching at business school. I teach some law courses and some finance courses. And the other half specializing in helping small companies. I got very interested in venture capital about 15 years ago. and was a partner in a VC firm for a while. And I spend most of my time now working with small companies, either as a non-exec director or as a consultant, principally in the finance side of things. But because I understand both law and finance, they sort of get two birds with one stone, if you like, when they work with me. So that's what I do. Now, I got involved in cryptocurrencies because one of the small companies that I ended up founding together with one of my former business school students is a cryptocurrency trading software company, which is what got me interested in the field in the first place and provided the grounding for what we're going to talk about today. So that's me, yes, and I do charity work. I work principally as a trustee for a charity called Justice Defenders, which seeks to ensure access to justice for prisoners in prisons in Africa. So.
Right, lovely, thank you very much. I think what's really nice here, Jonathan, is in terms of these cryptocurrencies are a really fascinating space, and obviously people are all motivated to different degrees by money, and of course we need money to be able to live. But also you're very much driven by a real sense of social purpose, aren't you? You always feel it's the right thing, important to do the right thing by people. So I think that's a very important message, especially in a world which tends to be, especially in the more corporate space, that's very driven by results, irrespective of the consequences of the people it's possibly doing around it. That's probably being unkind because there's lots of very good organizations out there as well. So I think that, thank you very much for sharing that. Now, so moving on a little bit from here, what we plan to discuss with Jonathan today is basically what is blockchain, who invented it, and why. What do you need to know about the cryptocurrencies? Why you should think about cryptocurrencies? What are the risks? What is the government doing about the industry, and are they doing the right thing? And are there any other uses of blockchain that we should know about? So some quite big topics. Now, I think what would be really good is if we could just touch on this part first here, Jonathan. Could you very kindly explain? Well, I'll touch on this Instagram graphic for a second, but could you focus a little bit on the Wild West?
I don't want to do that yet. I want to leave that until later, Rupert.
Right,
it doesn't make sense to talk about. He's the crypto cowboy, but it doesn't make sense to talk about him now.
All right. So if I display the one about the graphic here, with that.
How about the one above that? The number 11.
Number 11. Okay, this one here. Okay, start with that one. Yeah. Okay, so do you want to explain this?
Yes, sure. Perhaps I should say to begin with that this talk is going to be quite introductory. I based it on a lecture that I originally put together to explain Bitcoin and blockchain to my colleagues at the university, who are all intelligent people, but didn't know about this subject. So there may be people in the audience who have a more in-depth knowledge. So I apologize to them that this is going to be relatively superficial to start with, because it's intended to provide an introduction for people who are not so well informed. So it's probably worth to start off by saying, by explaining what a cryptocurrency is and why is it different from the sort of electronic money that we deal with every time we buy a cup of coffee at Starbucks. Cryptocurrencies, the most famous one, of course, is Bitcoin, but there are literally thousands of other coins, which we sometimes call altcoins, alt short for being alternative. But the one thing they all have in common is that they're all digital cash. And there's a really important difference between digital cash and electronic money. And this is where we need to start in order to understand Bitcoin. The difference is that when you're spending cash, imagine you're buying your latte in Starbucks with cash. You hand over a £5 note and they give you the change. Well, the ownership of that £5 note passes directly from you to Starbucks when you hand it to them. We say in legal terms, title passes on delivery. And they give you the change in cash, and that immediately belongs to you. It doesn't have to pass through any bank or anything on the way. Whereas if you pay for your latte with your cashless bank card, it's a very complex series of transactions that occurs involving both your bank and Starbucks Bank, as well as Visa or MasterCard, in order to get that money from you to them. It goes through the banking system, through at least 2 banks. So you see immediately the difference there between cash and electronic money is the use of the banking system. So people have wanted for a long time to create digital cash, which could go directly from you to Starbucks without having to pass through everybody else. But there is one really, really big problem with having digital cash, and that is that digital files can be copied. And a copy of a digital file is exactly the same and as good as the original. So if you started to have money in digital files, people could copy it indefinitely, you know, and they could spend the same money twice or 3 times or 10 times, and nobody would know the difference. This is what we call the double spend problem. So that's why we haven't had digital cash, even though we've had credit cards and debit cards for decades now. We haven't had digital cash. So the breakthrough of Bitcoin from its founder, a person who goes by the name of Satoshi Nakamoto, was to devise a way of solving that double spend problem. And he did it by creating this blockchain, which you've got illustrated on the screen now in front of us. Because this shows what looks like a complicated sequence of events, but when you boil it down, it isn't so complicated really. But the use of this blockchain prevents people from spending the same pound twice or more than twice. Because instead of having a single bank where the money is kept and transferred from somebody's account to another by a ledger, we have a ledger which is actually shared, distributed is the jargon word, but shared by every computer which is connected to the Bitcoin blockchain program. And anybody can be connected. Any computer is allowed to connect and to download the blockchain. And this is basically an indication of how it works, how one person, represented by this little fellow at the top here, can send the money through the system to somebody else, and how the system works and how it is immutable. But basically, to explain it really, really simply, a copy of the blockchain is stored on every computer connected to the system. Now, the blockchain consists of a chain of blocks, and each block has in it a series of transactions. And because they're in a chain, one block leads to the next in a logical order, which cannot be changed. And every transaction which is made on the blockchain is recorded in the ledger, if you like, which anybody can look at any time. So you can trace where money goes on the blockchain, where the Bitcoins go, and it's not possible to change history. So you can't spend the same pound twice, because the blockchain sees that you already spent it once already, and it won't allow you to spend it again. So I could go into explain the blockchain in more detail, but it's probably not necessary to do so. So Satoshi Nakamoto solved the double spend problem by creating this distributed ledger, which is a system, a money transfer, a payment recording and transferring system, which is not under anybody's control. There's no central bank, there's no government, there is nobody controlling it. Which is part of its attraction, because one of the reasons why he created this, he was determined to find a solution to the double spend problem, was that he, like a lot of people in America in the aftermath of the global financial crisis, so in 2009, he was really angry at the way the financial crisis had happened and the way that lots of ordinary people had been deprived of their assets and their savings and their pensions and been made bankrupt because of what he saw problems created by the greed of the banks. So these greedy banks, aided and abetted by the governments, had caused this terrible crash, and the people who suffered from it were ordinary people who lost their savings. And none of these bankers ever got punished for it, and the politicians didn't get punished. So this was, if you like, a libertarian ethos driving this to take it away from the control of the evil banksters and the incompetent governments and put it with the people. So it's populism driving it, if you like, the same sort of political momentum that led to Donald Trump's election. So this is what was behind it, and that's partly why it became really successful in America, particularly. Well, since those days, lots of things have happened, and cryptocurrencies have been enormously successful from a slow start, peaking with the first peak in value in 2017, and more recently last month achieving a new peak in value. Now, I say they've been successful. It still is quite small compared to other types of assets, compared to the foreign exchange market or compared to other financial assets in the world. But it has got up to approximately $1 trillion in market capitalization if you add them all together. Okay, if you add them all together. Actually, if you could go down to the next slide, number 12. So this is sort of the market capitalization of all cryptocurrencies, showing how they rank against each other. So the biggest one, the sort of pale orange one, is Bitcoin, and the dark blue one beneath that at the right-hand side is Ethereum, which is the number 2, and there are a few other more important ones on there. But if you look at this in terms of total market size, where the peak is today, the peak value is about $1 trillion equivalent, 2/3 of which is accounted for by Bitcoin itself, and the other 1/3 by all the other currencies put together. So this is roughly what it looks like. Bitcoin, despite being the first, and in some senses rather old-fashioned cryptocurrency, rather clunky, it still dominates the market capitalization. So it has been, in that sense, very, very successful in grabbing people's attention, and lots of people around the world, and increasingly lots of companies and even a certain number of banks have started investing in these cryptocurrencies. They have been investing in them rather than spending them, because Bitcoin is, I say, a little bit clunky and is difficult to use as a currency in the way that we would use euros or dollars if we were on holiday. So it's a bit difficult to spend, and it's a bit difficult to accept in payment if you're a trader of some kind, partly because the transactions take a bit of time to go through this blockchain. On average, they take 10 minutes to process. So it's not wonderfully suitable for buying your latte with. Some of the other currencies which are being created don't suffer from the same slowness and disadvantage that Bitcoin does. So some of those are a bit more suitable for buying your latte with. So in terms of paying for things with Bitcoin, it's only really possible to buy big things at the moment. Like you could no doubt buy a super yacht, or you can buy a Tesla if you want with a Bitcoin. But you can't buy a newspaper very easily, or you can't buy other day-to-day things. And I think it's unlikely that you ever will with a Bitcoin itself, although you might be able to with other types of coin. Anyway, let's leave that point for a moment and talk a little bit about the risks, because I know you were very keen that we should cover those. So I think it's...
Yeah, great. That's right. I'll come on to that in a minute. So that's slide 9 in a second. Jonathan, is that correct? Would be a good one.
It is, yeah. That's the one.
Just before we do move on to that, I know someone emailed us a question a few days ago, and that was particularly to do with the climate impacts.
Yeah.
Of course, there's a lot of discussion. Is it World Climate Day now? Whatever it is, I'm not sure. But just tell us a little bit
Earth
about
Day today, yeah. If you bring up the risk side, I'll include it in the risk, because it clearly is a risk, yeah. So I've got on this slide 4 risks to which we need to add climate change as a 5th. The 4 I've got on there, first of all, because this Bitcoin and this blockchain is totally outside the control of governments and central banks and things, it could theoretically at least pose a threat to financial stability, and central bankers worry about this. So, they don't like the idea of a monetary system which they don't control. So that is an issue. Another quite real problem is hacking. Some people have lost money because the places where they keep their Bitcoin, Bitcoin is kept in a wallet, but this wallet is a software wallet. And if you keep your Bitcoin in a wallet which is controlled by an exchange is where you change your pounds and dollars for Bitcoin. If you keep your money in an account at an exchange, you can be hacked. And several of the big exchanges have been hacked in the past, and people have lost their money. And because of the nature of Bitcoin, it's impossible to get it back once it's been lost. There isn't any way of retrieving it. So that's your second risk. Then the third risk is crime and money laundering. And this was, particularly in the early days, a big worry of governments and police forces, that criminals would use Bitcoin, because it was thought in the early days that Bitcoin was totally anonymous, and you could never find out who was behind each of the accounts that hold the Bitcoin. That's proved to be not true, and enforcement agencies have found ways of identifying the people who are holding particular Bitcoin wallets, and so actually that risk is a little bit less important than was originally thought. But there's no doubt that these days, if you want to buy something illegal on the dark web, you want to buy yourself a gun or some illegal drugs or things, then you might well be asked to pay with a cryptocurrency. And then consumer protection, and this is the one I worry about most of all, because as we shall see in a moment, investing in cryptos is very risky, and where there is highly volatile instruments, people can lose a lot of money and have lost a lot of money. And where crime has actually been a big problem is not so much criminals using Bitcoin to launder money, it's more criminals using Bitcoin to steal people's money and to defraud people out of money. So there have been quite a few Ponzi schemes and scams of various types using cryptocurrencies. So consumer protection is definitely a big risk as well. Now, coming to the climate.
Sorry, I just wanted to give you a chance to answer the climate question as well. But just one other question around this. You mentioned that there was potentially a bit of a security risk with some of the exchanges. Is presumably the issue in that scenario is not with the Bitcoin itself? It's actually more that the exchanges can be hacked. Is that right?
Yeah, it is. It's a bit like, let's try and use an analogy with the normal money we're familiar with. If you leave your wallet or your purse in your handbag in your car and you forget to lock the car, somebody can open the door and steal it. Now, even if you have locked the car, sometimes these thieves have these special devices now where they can unlock your car. I've seen them on television. It's really frightening. So if you've left your handbag in the car, even if the car's locked, somebody can hack into your car and get your handbag. So it's the same sort of risk here. If you leave your Bitcoins in a wallet under somebody else's control, then you are running the risk of being hacked and them being stolen. So if you want to keep your Bitcoins absolutely safe, you can keep them not in an exchange where they could be hacked, but you can keep them in a safe in your house, or you can keep them written on a piece of paper in a safe place. Because how you access a Bitcoin. Bitcoins work on the basis of 2 keys, a public key and a private key. The public key is basically the address of your Bitcoin wallet. And the private key is your password for accessing that wallet. So the public key is no point. People do need to know what your public key address is in case they want to send you money, or in case, it's a bit like your bank account number, if you like. People need to have it to be able to transact with you. But the private key, the password, is the really important thing to keep safe. And so you can keep your Bitcoins completely safe by either keeping them on a flash drive, which you keep not plugged in, but keep in a safe, or the old-fashioned way of, writing down the private key on a piece of paper and keeping it locked away in a fireproof safe. So you can keep your money completely safe if you want to do that. But lots of people, including me, we leave our Bitcoins in the wallet with our exchange because we want to trade with them. And there's therefore the risk that we're running that somebody could steal them if they can hack into the exchange. And once they steal them, they're gone. Just like if you forget your password, your private key, if you forget your Bitcoin password, then you are completely lost, because there is no forgotten password function in the blockchain. So you lose your private key, you've lost the money.
Well,
Yeah.
related to that question, I don't know if the story is true or not, but there was a story going around a while ago, I think it was 2 or 3 years ago, where someone actually had got their crypto coin and all the details on their hard disk on their computer. And I don't know whether either the computer failed or whether it was the case that they something else happened to it. But one way or another, the hard disk got disposed of. And obviously, I think then it was when cryptocurrency wasn't actually worth very much. But now that the value of that hard disk, I'm not sure what the value is, over £1 million or something. But
yeah.
Have you heard that story? And can you
Oh, absolutely. No, there are lots of stories similar to this around. So the moral is you've got to keep really your private key and your details really carefully stored. If you've got a lot of them, I mean, people who have big holdings tend to keep them in, as I said, a cold wallet, which is one not connected to anything else. But if you've just got a small amount, as I have, I just leave it with the exchange, and so I can trade it. So anyway, I wanted to talk about the climate, because this is a really important issue, as it is Earth Day today. Yes, yeah. There's been lots of comment that Bitcoin mining. Now, I didn't explain this initially, but the way the blockchain is actually driven is by the computers that are attached to the network, if you like, the computers that have all downloaded the copy of the ledger and are all processing it. How they work is that they process the new blocks by attempting to solve a very complex mathematical puzzle. So all the computers that are connected at any one point in time are attempting to solve the latest puzzle. And the puzzle is structured in a way that it connects the previous block on the chain to the next one. So in other words, the mathematical solution to the puzzle is the link between the last block and the next one. And whichever computer solves the mathematical puzzle first has the honor of creating and attaching the next block to the chain. And those computers are called miners. They're mining for Bitcoin, and they're called that because if you succeed in solving the puzzle first, you are rewarded by an issue of brand new Bitcoin by the system. So, and the Bitcoins now are very valuable. So obviously you want to be the first computer to do that. So there are lots of computers around the world all competing to try and find this mathematical solution first. Now, computers, of course, use electricity. And because solving this problem is quite difficult, it takes up quite a lot of electricity. And so calculations have been made, particularly by environmentalists recently, and trying to make this understandable to the average person, have made claims such as, the Bitcoin mining uses as much electricity as a small country does. So these are the claims which have been made. And it is certainly true that Bitcoin mining does use a lot of electricity. The riposte from the industry is to say that, yeah, it maybe uses a lot of electricity, but a lot of that electricity is electricity that would be surplus otherwise, because miners tend to locate themselves in places where electricity is cheap because it is in surplus. But nevertheless, there clearly is an environmental issue here. I think that this is essentially temporary, because the technology which drives these various cryptocurrencies is in continuous evolution. It's continually being improved. And I commented before that Bitcoin is a little bit clunky and isn't particularly good for spending. But lots of developments are in process, some of which have already been implemented to solve that problem. And they will tend to solve the mining problem at the same time. So I think this is a solution. Technology will find a solution to this energy problem as time goes by, because it's already got part of the way there. Also, I think it's quite likely that Bitcoin, although it is the dominant coin today, might well not be the dominant coin in 5 years' time, because it is version 1 of the software, if you like, and things are improving all the time. So some of the more recent coins that have been developed building on Bitcoin, or indeed taking a slightly different path, will have much less climate effect. I mentioned already Ethereum, which is the number 2 coin. Ethereum doesn't use the same type of blockchain as Bitcoin does. And Ethereum's blockchain is much, much less energy intensive than Bitcoin's is. So that's just an example of what I mean by saying that different ways of processing will be developed that use less electricity. So I don't think it is going to be, in the long term, a climate change problem by itself.
Okay, lovely. I think that's answered that question really well. Another question related to this, I think what we'll do in a moment is perhaps give those of you who've asked questions in the chat, we'll perhaps try and deal with some of those. That's all right, Jonathan, and we'll come back to the other points. But just as a general point, dealing with the security side first, and hopefully move on to some of the more positive aspects in just a moment as well. Is there a real issue over time, as things like quantum computers kick in and everything else, that in real terms there's actually going to be an increasing risk to these coins, especially once you start to get rogue states getting involved, or some of our other larger states out there which could be regarded as hostile, and obviously remaining neutral as far as this is concerned. But isn't this an increasingly exponential risk over time, or is that not the case for all sorts of reasons?
Yeah, I think definitely quantum computing does pose a risk to all types of cryptography, not only for cryptocurrencies, but in general for national defense and everything as well. So quantum computing definitely does present a risk. Now, I don't think quantum computing is going to be here tomorrow, because there are still quite a lot of issues involved in getting quantum computers to work properly. I know we've had experimental computers which have done interesting things, but they're still quite a long way away from the stage when you can have one in your office. So it's not something I would worry about in the short term. And also, I think that the cryptocurrency world is likely to evolve in line with the technology involved of computing. So again, this is not a standstill. Things are developing all the time. So I anticipate that the industry will take notice of what's happening in computing and will adjust accordingly. So the cryptography will change, I think.
Lovely, thank you. Just dropping in a few of the questions, and those who joined us do ask questions, by the way, because we will try and get round to every single one. And also, I know Damien's very kindly offered to drop in on part of our stream and a bit later on. but equally, if one, two of you have got some really good questions and feel you'd like to ask them directly to Jonathan, then we'll bring you into the green room and do it that way. But there's two things I think which a few general points which I'll just bring up for a second. Obviously, I think, Thomas, we've already dealt with this with the full magazine. I like that. Well, hopefully, Jonathan's answered that for you. If obviously you've got more questions around that or thoughts, then do come in.
I need to talk about trading a bit. He's making an allusion to the risk of trading there, and I think I do need to talk about.
Yeah, go on.
Yeah,
far away.
Yes, and well, people, of course, have made a great deal of money if they've bought Bitcoin at the right times and held on to them. So people who bought Bitcoin sort of in the early 2010s and who have held on to them, not been tempted to sell, of course, have made an enormous amount of money. You could have bought Bitcoins for in 2014 for $100 or something like that. Bitcoin, which is now worth $57,000 or something. So a small number of people have made a huge amount of money. Of course, there are people who've lost money as well, because when Bitcoin peaked at just over 19,000 in 2017, that was on a wave of popular enthusiasm. And people who bought in at that level saw their investments worse than decimated because it fell from almost 20,000 down to about 4,000 in the next 2 years. So people got their fingers burnt very badly. And unfortunately, sometimes an ordinary man in the street buys things when they're in the news and everybody's talking about them, which tends to be when they're at the top of their price range, and then gets dispirited and despairs and sells them again when they're at the bottom. So there will be lots of people who've lost money like that. And the big problem, in one sense, with in buying cryptocurrencies is that the price is very volatile. It's not at all unusual for the price to move 10% in the course of 24 hours, and sometimes more than 10%, which is much, much more volatile than stocks and shares or foreign exchange or anything like that. And so clearly, it's jolly dangerous if you don't know what you're doing, which is why I would say to anybody who's a beginner but interested in participating in this, please don't put a lot of money into it in the beginning. Just start off with what you can afford to lose, £100 or £200 or something, and have a go, and just see what happens. Now, I say a lot of people just buy Bitcoin and hold on to them. As a finance person, that sort of goes against the grain for me, because money should always work for you. And these days, there are several different ways that you can get your Bitcoins to work for you. For a start, there is peer-to-peer lending now in the Bitcoin world, just as there is in the normal currency world. So there are various platforms which will allow you to lend your Bitcoin. And so you effectively earn interest on it from other people borrowing it. And so that is one thing you can do with it. That's definitely worth considering, rather than just having it sitting in your wallet doing nothing. But the other thing, and the thing which interests me, what I got involved in with my little company, is trading Bitcoin. Now, trading Bitcoin is like trading foreign exchange. There are lots of people who will help you do this, lots of platforms offering Bitcoin trading services. And some of them are promising really high returns, get rich quick type websites. Well, the same rule is true here as it is always, and that is hand in hand with high reward goes high risk. So if you choose to use a get rich quick provider, somebody who's promising you a 50% return in 48 hours or something, or in a week, then you're taking a really high risk. So what we chose to do with our trading platform was to use a series of algorithms, whereas most platforms just use one or two. We use 5 working simultaneously to try and minimize the risk for our users, on the basis that it's better to make a small return every day or every other day, cumulatively, avoiding the risk, than it is to gamble on, you know, the long odds horse getting over the line first. So there are different ways of treating risk, and I've always been a bit of a sort of steady as she goes person. So I'm quite happy trying to make, you know, 1/4% every day rather than trying to double my money in a week.
Yeah, lovely. We'll come back to that in a moment, Jonathan, if that's right. Now, some of you've actually made some comments about what was discussed about 10 or 15 minutes ago. So I probably won't touch on those again, particularly, because I think they've been covered. I would just like to pick up a couple of points here, though. For example, Renata's made about, I don't know whether you know about this at all, something referenced about part of technology evolution is QKD, quantum key distribution to update security key at nodes. Does this mean anything to you or not? Because it seems like a very technical question.
You broke up a little bit there. Okay,
yeah.
Okay. Part of technology evolution is quantum key.
Explain this very simply if you know the answer to it. I don't know of that one at all.
Yeah. He's partly asking a question that I attempted to ask in simpler terms earlier. So it's part of the answer to how technology is going to develop to keep the blockchain secure. At least I think it is, if I understand him correctly. Yeah.
Okay, and related to that, because I think it's a really good question, is this thing about liability or insurance or indemnifying any risk. For example, is there any insurance you can take, or do any of the platforms underwrite against the risk of their platforms being hacked, or some other similar type situations? Or are there insurance you can take against specifically a hacking type incident that you're aware of?
Insurance is starting to be available on certain risk types in the crypto space, definitely. So whether you can take out insurance against your exchange or an exchange being hacked, I don't know. It wouldn't surprise me if you could. It probably depends which exchange you're using, because some exchanges are better and more highly reputed than others. So, for example, the most famous exchange is the one which just became a listed company last week, Coinbase, which became a listed company using one of these SPACs, yet another trend in the financial world. So they did a direct listing through a merger with a SPAC. So Coinbase is licensed, regulated, and it wouldn't surprise me if you were able to get insurance for a wallet on Coinbase, or perhaps from Binance, which is the other very big exchange. But there are lots of exchanges around. Some of them you definitely wouldn't be able to get insurance on. So yeah, probably depends where you're keeping them.
It's just a good question. It's more about minimizing the downside risk with all these things. Obviously, there's been reference about people using scams to get you to pay in Bitcoins. I think Nikki made some reference about that earlier on. But in real terms, that's going to be the same problem with banks, isn't it? You know, in real terms, you can hear scenarios where people's banks get raided, or in effect, you end up by paying for something to get rid of a particular incident. So, and actually, is interesting enough, presumably, if you took BitCase as a case in point, presumably the security behind that is probably a lot stronger than it is within many banking systems, isn't it? If you took the exchanges out of the equation, in real terms, if someone managed to get hold of your banking details, then they're pretty well in, aren't they? So, or isn't there a possibility? Are the risks any higher or lower with a lot of banking systems than with, say, in terms of the security of the currency, if I can call it that?
Well, the biggest risk, I think, in the banking system is probably the same as the biggest risk in cryptos. It's people behaving stupidly, people giving away their passwords or doing things that they shouldn't. There's very, very few ways of guarding against that. If you give your details, your passwords to somebody else, who turns out to be a fraudster, then it's really difficult. And in that situation, the crypto world is less favorable to the end user, because these days the banks will sometimes compensate you if that happens to you, whereas in the crypto world there isn't anybody to compensate you, generally speaking. I mean, there are occasions when there are, but generally there isn't. So in terms of the difficulty of getting in, well, the problem for the banks is they're using old systems, legacy systems, which are definitely not going to be as secure as the most modern systems. But again, it depends who you're talking about and how much care they've taken and what kind of systems they are using. So it's difficult to generalize as to which is safer.
Yeah. Okay, thank you very much for that. So I think what we'll do is come back to some of the questions in just a moment. So do keep those questions coming. Say Damien's very kindly offered to join a bit later on. But if anyone else would like to come into the green room to be part of the discussion, do shout out. We've extending the time a little bit today to give everyone a bit of a chance. Moving a little bit on from this, Jonathan.
Can I talk a bit about regulation then, because that's the next subject? And we've laid out all of these risks that there are to financial stability and everything. What's the government doing about it? I'm sure people want to know the answer to that.
Yes, could we keep that fairly positive, because it'd be quite nice to move on to some of the more positive signs of this.
Sure. Well, in a sense, this is positive, because I mean, the government is our government and others are not sort of blind to this. Some governments around the world have overreacted terribly and tried to ban cryptos altogether, but others have been a bit more sensible and seen that there's an opportunity in this as well as a risk. So the United States, in particular New York, where the main financial center is, have been quite heavy-handed on cryptos, and they've imposed quite a heavy regulation, which has driven a lot of people out of New York into other locations in the US and elsewhere. And in fact, if you want to bring the crypto cowboy back up, this is where he comes in. This is one of the states in the United States which has made the biggest efforts to attract crypto businesses is the state of Wyoming. And the state of Wyoming has passed a series of laws to make life easy for crypto and crypto trading businesses. So anybody involved anywhere in the crypto space, whether it's technical trading or whatever, is welcome to go and set up in Wyoming. And they've got a tax holiday for 5 years and lots of other regulatory advantages to go into the big, wide open state of Wyoming. So it is really very, very attractive place to have a new business. But coming a bit closer to home, the FCA sat on the fence for quite a while before taking any action. But it has now put in place a requirement that anybody doing any of a quite long list of activities needs to be regulated. And to be authorized by the FCA. So it looks as though we are a little bit following down the same road as the Americans and as the people in New York. Other places have been a bit more, let's say, soft touch about regulation because they want to attract businesses, the same motivation as Wyoming. So in Europe, Gibraltar and Malta and Cyprus have all been quite keen to attract these new businesses to set up in their jurisdictions. The EU hasn't really done very much apart from pass some money laundering regulations. So the EU is still sitting on the fence trying to decide what to do. Not surprising, because it is difficult to know. And when you've got 27 countries who've got to agree more or less, it's difficult to get that sort of agreement. The authorities are aware of the risks and have taken various different approaches to them. As I say, some of them have attempted to ban things completely. Most recently, India and Nigeria have attempted to at least ban cryptocurrencies being used for payment or for banks from having anything to do with them, which is likely to rein back any development in those countries, which is slightly odd because India is a tremendous location for fintech companies. Lots of financial technology and software comes out of India these days, and for the government to clamp down on this new area is perhaps slightly short-sighted of them. It seems to me, anyway.
Yeah.
So, yeah, positives. Well, of course, you can make a good return on trading cryptocurrencies, or even just holding them if you get your timing right. If you buy on the lows and sell on the highs. It takes quite a lot of time to trade, whether it's foreign exchange shares or cryptocurrencies. And some people like being in front of their computer screen all day long, but most of us don't have the time available to do that. And so what we decided to do, and what attracted me to go into business with my former student, was the idea of having an automated system. So you can set up the parameters you're interested in, set your strategy or your bot going, and then go away and get on with your life or go to bed or whatever. And the system will trade for you when you're asleep or while you're at work or whatever. And because of the various algorithms designed to reduce the risk, that you won't come back after work and find you've lost all your money. The platform won't allow that. So I think that's very much what attracted me as a slightly different way of doing things compared to what most of the other people were doing.
So is there a way effectively in that of putting some form of stop loss in there? So so if the suddenly goes very volatile, you set the limit of the losses with that. And
yes, you do. Yeah, it does. I mean, the way the system works, explained very simply, is that if you make a bet of £200, so you choose your currencies first of all. So let's keep this simple. Say you're interested in pounds versus Bitcoin. So a very, very simple one. And let's say you decided to invest £200. The system would divide that £200 into two chunks of £100, and one of those chunks would be immediately converted into Bitcoin. So you've now got £100 in sterling and £100 equivalent in Bitcoin. And then if the value of Bitcoin went up at a trigger point, which you had set in advance, the system would convert that Bitcoin back into sterling. So you'd then have, I don't know, £210 of sterling. If, on the other hand, the value of Bitcoin went down, the £100 which started off in sterling would convert into Bitcoins. And then if, as normally happens, Bitcoin then a bit later goes back up again, then you see there is a variety of trigger points which is converting the relevant half one way or the other in a way which locks in the profit as according to the market moving. So you do have a stop loss. So if things go disastrously wrong, or if you're investing in one of these other thousands of small coins which are even more volatile, and the thing falls out of bed, yes, it will cut you. It will stop your loss at the point that you have predetermined, whether that's 10% or 20 or 50 or whatever. So that is almost the worst case scenario, actually.
Yeah.
So locking in a loss.
You mentioned that some of these coins, for example, I think it's Bitcoin, you might take perhaps 10 or 15 minutes to trade, if I've understood that correctly. Is it a similar thing here, that the market could be so volatile that, and also I don't know if it's similar with Bitcoin, but for example, if you were trading on the shares, obviously the big currency dealers, the big share exchanges have massive timing advantages. Could you be almost at the back of the queue because you happen to have decided to sell yours perhaps they want the
No,
system to kick 10 or 15 minutes later.
if you're trading on a big exchange like Binance or Coinbase, it won't work like that, because the exchange will net off buy and sell orders which are opposite to each other. So your individual £200 won't go into the blockchain. Very, very unlikely. What Coinbase or Binance would do is, if you're selling Bitcoins at the same time as I'm buying them, they'll just net off those two together. So only the eventual net will go into the main blockchain. So no, if you trade on our platform, which trades on Binance, we're a sort of sub account of Binance, your trades will go through in seconds, in a few seconds.
Wow. Okay. Yeah. And no, thank you. That's really good. I think this might be a really good point to bring in Damien, actually. I think before we do that, let's just touch on a couple of things here. And let's look at a little bit more on the positive, very positive side here. And this is obviously no indication of some form of guaranteed success with this, by the way. But the thing that really surprised me is 5 years ago, if someone had put their money into US dollars, say, if this is all in US dollars, by the way, $1,000 US, if you the same value now in Bitcoin, according to this, is 148,000 US dollars. 5 years later, from $1,000, and Ethereum came out way higher than that, which is staggering, isn't it? So yeah, that's 273,000 US dollars. So clearly there is a lot to be money and fun to be had here. Now, what I'd like to do is to bring in Jonathan. Sorry, not Jonathan.
Damien, you mean? Yeah.
Damien at this point, if that's right. Let's try and bring Damien in. Give me a second. There we go. Damien, we've got you online, as it were. So welcome. So Damien, obviously we've had a great pleasure of knowing each other for the last, well, we've known each other for about 6 or 7 years, but coming on board as a client about 6-7 months ago, as it were, and live in a beautiful country called Sardinia. So is it very relaxed regulations over there as far as cryptocurrencies are concerned, first of all?
Yeah. Hi, everyone. Thanks, Rupert. And hi, Jonathan. Good to see you again. So Sardinia is part of Italy, which is part of the EU, and they are kind of very similar to the UK. They allow cryptocurrency and they allow you to use exchanges. Some of the comments have been about how to get money in and out of crypto wallets and into your what's called a fiat account, so back into euros or GBP or sterling, and that can be quite tricky. And I saw today that NatWest have actually said they're going to ban business accounts that are trading in crypto or accepting crypto. So the banks actually are quite concerned about it, because there's money leaving the banking system to go into cryptocurrency. And so they're quite worried about that, which is why places like Turkey banned it, because there was a run on the Turkish banks and the money was going into cryptocurrency, and that's why they've banned it. So they are concerned about it. But yeah, regulations here in Italy are similar to the rest of Europe and the UK, so actually quite similar.
Wow. Yeah, that's fascinating. It's interesting the banks are worried about it themselves, when actually some of the banks are probably, well, let's put it this way, two of our greatest UK banks, of course, RBS and NatWest, and is it Lloyd HBOS, is it, themselves, would think of themselves being a secure asset and shares 10 years ago, and look what happened to them, needing billions of pounds or 750 billion pounds, whatever it is, to be bailed out. But anyway, that's another point. So it's interesting they should be getting scared of Bitcoin and these other currencies. But Damien, can you share a little bit about your own personal experience with this? Because I think as part of this session we had yesterday, I have to say, when you shared your story, my jaw dropped, and I think everyone else's jaw dropped yesterday. I think I saw reference by David Davis making a comment here on the feed as well. But just tell us a bit about your experience and what got you a little bit into this, and perhaps some of your concerns to start with, and what's happened since, if that's all right. If you're okay to share that.
Sure. Yeah, thank you. And just wanted to acknowledge and recognise Jonathan, because the explanation you gave around cryptocurrency was brilliant. So yeah, it's been a great explanation. So my own personal experience was during lockdown, the first lockdown. I realised that we weren't going to be going on holiday anytime soon, so I took some holiday money and invested that into some cryptocurrency. some of the coins that you've mentioned, and some others that were heavily tipped by somebody who I trust very, very dearly, or I really value their opinion and know that they can be trusted. And so I invested some of our holiday money into cryptocurrency, and I created a rather nice tax problem by the fact that it did rather well. And just picking up actually on one of the points Jonathan made earlier around the size of the cryptocurrency market. Actually, since the 31st of January, it's actually doubled. So the market capitalization of cryptocurrencies is now trading at around about $2.1 trillion. So already in less than 3 months, it's doubled its size, and that doesn't look like slowing down anytime soon. So it's a very exciting time to be involved, but it is slightly cumbersome to put your what's called fiat currency, which is your home currency, such as sterling or euros or dollars. It is actually quite difficult at times to get large sums of that into the crypto system and then back out again. So it's not straightforward. You do have to jump through a few hoops with it. But if you've got money and you're trading it on the exchanges, as Jonathan mentioned, it's actually great fun to be enjoying doing that. Some of the more difficult challenges are, how do you get the money back out of that, and how do you get money into it as well? Because a lot of the banks are resisting that. I did a transaction the other day where I was putting money into one of the exchanges that Jonathan mentioned, and the bank declined it and wouldn't let it go through without me going through a whole load of security steps. So yeah, you can see it's quite tricky.
No.
Yeah, I echo that, because I've been trying to find a cheap way of getting money into our account. I mean, our little company is called Yanda, YANDA, and I'm trying to find a cheap way of getting. And I thought I'd found one, because I've got a Wirex account, and a couple of weeks ago, I managed to get £200 into cryptos from my Wirex account, only to receive an email from Wirex at the end of last week saying that the FCA has told them to stop doing this. So it's temporarily suspended. Yeah, I mean, Binance and Yanda, we do working together. There is a way of getting money into cryptos, but I agree with you entirely. It can be difficult. Getting money in, let alone out, can be difficult. The other way, ordinary people, if you just want to speculate by buying a bit and holding it, is if you've got a Revolut card. Revolut allows you to buy cryptos on their card. I mean, within Revolut. It doesn't offer you all of them. I think it only offers you the five main cryptocurrencies. And if you're legally minded, you should know that you don't actually own them. They're owned by Revolut, but nevertheless, for the moment, Revolut seems okay. So, for example, I had some Litecoin, which is about number 7 in the list for a while, which I bought just on my phone, on my Revolut app on my phone, and that's a matter of a few seconds to do that. But you can't send them anywhere, so I couldn't send them to Yanda. I have to just keep them on my phone, which is a little bit boring. So I couldn't really trade them or anything. But
I've got something quite similar where one of the exchanges I use issues a credit card, and I can then use that credit card to put crypto onto that account. So it becomes like a prepaid debit card, and then I can go and spend on that card, and that's effectively in a euro or pound or dollar. And that can be my crypto wallet. I can transfer money between my crypto wallet and
that's very good.
Card.
Yeah.
So yeah, that's a pretty good one.
Which exchange is that, if you don't mind me asking?
It's crypto.com.
Crypto.com. Okay, right. Yeah.
Damien, sorry, I may have missed it, because I was obviously trying to read the feed at the same time. It's so easy to just miss what people are saying. Did you actually explain what you put in a year or so back and what you've ended up with so far to date, if you don't mind me asking? And are you happy to say? You may not be happy to say. Or if you'd rather not mention values, mention it by multiples. Let's put it that way.
Multiples. Well, multiples is a bit easier. The total amount I put in grew 10 times in the space of about 10 months. So the original sum grew by 10 times that amount within 10 months. And I'm pretty much where I've got it, and one thing I should say, very, very important in cryptocurrency, if anybody is really truly interested in this, you must get educated around it. And all of the exchanges, pretty much Coinbase and Binance, offer fantastic academies where you can learn free of charge. There's a whole host of information out there. There's some great people you can follow on YouTube, and great minds and insights into this. It's very important that you get yourself educated because it is a complex area that you need to understand. So having got myself educated over the last 12 months, I'm continuing that, and so I'm enjoying my if you like, the benefits of the growth. One of the things somebody was asking about earlier, I noticed on the comments, was, is there a real time or a real life use for the cryptocurrencies and blockchain? So the way that blockchains work, as Jonathan mentioned, is this kind of decentralization where there's no centralized control. The blockchain is owned and run in the public. So the beauty of that is that it can speed up processes and can speed up everyday applications that you and I would normally use. So for example, there's a fantastic blockchain application which is called a decentralized application, or DApp for short, and it is streaming live stream videos, very similar to YouTube. And this can stream them extremely quickly, and it takes it away from YouTube and into the public domain. So it's streamed on the blockchain. So nobody has central control over it and can't censor it. So in future, that could become very, very important, because a lot of these social media platforms have become much more draconian and much stricter in what they're allowing. And so, it's a much faster way of accessing information. And then you look at things like transactions, where Visa does a transaction or PayPal does a transaction. They're reliant on the technology to exchange all that information and to exchange all that data. The blockchain does it rapidly, like fractions of the second quicker. So the real-time use is in the real life financial world, in the world of technology. Anything to do with technology is speeding up on the blockchain, 100%.
Yeah, it's really interesting. Something that will be of importance to everybody is that the land registry, it has a pilot project underway at the moment called Digital Street, which looks at putting the details of the title deeds of every property in the UK onto a blockchain. So that things like mortgage fraud will become much more difficult, because there'll be no point forging documents anymore, because everything will be captured immutably on the blockchain. So that's another use, nothing to do with financial markets, but another use for blockchain. And in the same vein, the school I was teaching at, the business school I was teaching at, when I met Mario, my partner in Yanda, it was called the London School of Business and Finance. And I've just seen in a press release from them that their campus in Singapore is issuing degree certificates and other course completion certificates on the blockchain, so that they can't be, again, forged, they can't be amended, and they're available for people to check forever and ever. And in order to check, you just need the public key of the relevant certificate. And so blockchain has all sorts of uses outside cryptocurrencies, and indeed outside finance altogether. So the technology itself is absolutely brilliant.
Wow.
Funny enough, if I'll just build on that as another example. In the future, Jaguar Land Rover are developing purely electric cars in the future. They're going away from petrol and diesel. They're developing electrical and hybrid vehicles. And one of the ways that the future technology will work is, as your car is driving towards a power charging station, it will know where those charging stations are, because it will be figuring that out from your sat nav, etc., exchanging information on the blockchain. It will pull up to the power charger. It will exchange that wirelessly, and blockchain helps all of that happen. And then you will be charged for that use of that electricity, but you won't need to use a credit card or anything. The car will do all that transaction for you, and that's all done on the blockchain. So it's incredibly, what's ahead in the techno world is incredible.
No, probably. I'm going to just cut in here actually, because we were asked some questions earlier on by Karen, which is sent by email. I think she's going to watch the recording afterwards. And then what we're going to do is I'm going to have a like 3 or 4 minute just switch over as well, where we just cover what's happening next week, and we'll come back to some closing questions as well. So if you've got some questions which haven't been answered yet, then do drop them in the chat. Equally, if we've missed yours from earlier on, then repeat it again, because in reality we've got a big list of things here, and it's quite possible we've missed yours. So let's deal with Karen's question first, if that's okay. Let's bring it up on screen. It's there's 3 or 4 questions rolled into them. Now, a couple of those we've sort of dealt with, but Jonathan or Damien, for that matter, have you got any thoughts on any of those points there that you can see?
Well, the first one is easy to answer. I mean, none of them. Now, Revolut I talked about earlier. So Revolut and these sort of fintech companies are a bit different, but amongst the mainstream banks, none of them do. And they'll do everything they can to stop you using cryptos if they can. So that's not very helpful. So if you're interested, you're better off using Revolut or TransferWise or Wirex or something like one of those challenges. Coinbase is unfortunately, or was in the past, notorious for its poor customer service and high fees. So I stopped using Coinbase. In fact, Yanda stopped using Coinbase, and we're now using Binance exclusively, partly because Binance has got much better customer service than Coinbase has. So I feel your pain there, Karen, I'm afraid.
Yeah.
And interestingly, Rishi Sunak has announced that there's now a working party that he's put together to look at a central currency for the Bank of England. So this is basically where they're looking at digital currencies run by the central banks. Now, these are likely to look a little bit different to cryptocurrency. There'll be a digital currency, but they're more likely to be controlled by the central bank rather than being on the blockchain, the public blockchain. So they'll look very similar, and there'll be a digital currency, but they will be controlled, which means that they don't get rid of the control onto the blockchain. So there'll be a kind of a version of it, a central currency, digital currency.
Right, lovely. Thanks very much. Tell you what, Damien, you've become a real anorak in this, haven't you? Even almost like Jonathan. Yeah,
it's good to get educated, right? You need to, if you're going to get serious about this, it's good to get educated and educate yourself about it.
So, that's really impressive.
And by the way, I will be using Yanda because there's some stuff that I need to do for trading wise on the portfolio I've got. So I will use Yanda for that.
Good, great, thank you.
So, thank you. Yeah, we'll come back to you, Jonathan, in just a moment,
yes.
And Damien as well. So stay there, please. And also, any closing questions, do ask them in the chat. We'll obviously come back to those in just a second. Just a little bit of a wrap up and readiness for next week. Just bear me a second while I get there. Next week, we've got Steve Hyland back on again. Those of you who joined us at one of those live streams about 7 or 8 months ago will remember it. It's one of these moments that's been scarred in my brain forever. No fault of Steve Hyland at all, but it's purely that we were experimenting, bringing 2 different technologies together. And I think a politest way of saying it was a car crash. But actually, like all car crashes in this type of context, it actually made for a very entertaining show. What we did end up with was actually an hour of really good content, because we actually were run by about 20 minutes. And as Steve Hyland shared massive amounts of value last time, was both highly entertaining, but also very informational. And he's going to be talking about this whole aspect about raising a profile, using video and podcasting. And believe me, he is someone who really, really knows. He's got 25 years plus in the as a broadcaster. He's been on the main TV channels. He's also been on many of the shopping channels. And a few years ago, he formed Business Connections Live. So you'll thoroughly enjoy that. So do sign up for next week. You'll learn lots from it and be a great episode. In terms of our next mini conference, that's on Tuesday, the 4th of May. We've decided to slightly shorten the format. Actually, it's now starts at 3 o'clock and finishes at 5. If a number of people do want to ask some questions and it carries on a bit longer than that, that's great. So it's starting at 3 o'clock. If you do feel you can join in, it's again lots of Q&A as part of it. And if you want to register for any of these good things like the mini conference or the on-demand webinar, or equally these live streams like you're joining in today, all these options are available on the homepage of our website. Just to clarification on the mini conference, our website's not been updated yet. It's something I'm going to have to do over the next few days. So ignore what it says on the tickets and just go by what I've described now. And also, if you have not done it before, do complete the sales and marketing diagnostic. And that the URL is there, businessgrowthbureau.tv/diagnostic. And what you'll do is you'll get an 8-page report at the end of it, which measures some key performance indicators in your business. And as part of that, you're very welcome to book in a call and we can discuss its findings and what they mean as part of that. What we're doing as well, a bit of a fun thing we started doing about 2 weeks ago, is I started putting up daily snippets. They're only about 2 minutes long each, but they're like a top tip on different aspects of your business. So do feel free via our Facebook page to go there, and you can get direct to a page from our website, which is businessgrowthbureau.tv/Facebook, or you can go straight to our page as well. And you'll see a new one being posted each day at 7:45 in the morning, British summer time. So I'm going to be busy this weekend recording more content for the next 2 weeks. And in terms of contact details, obviously, I'm sure we're all very grateful for Jonathan very generously sharing his time today. So thank you very much. And so we will come back to you with some more questions in just a moment. The platform yanda.io is available there. So do have a good look around. And Jonathan, no doubt, will tell us a bit more about that in a second. And Jonathan's phone number and email address is there as well. So I think what we'll do is be nice to come back to the four of you again, if that's all right. And let's give Muriel a bit of a chance to ask a question. Have you got a bit of a question here, Muriel, for Jonathan?
Yes, I have. Is there somebody I can give X amount to and say, make that work for me? So I don't have to do all the fiddly bits.
For somebody to do that for you, they've either got to do it for you as a favor. You can't pay them or give them anything for it, because if they do, then they're being a fund manager, and that's a regulated activity. So unfortunately, not so easy. Now, having said that, one of the things that we've got planned in the future is to develop a fund to allow people to do that. And there are, I think, the authorities have been a bit resistant to allowing exchange-traded funds for cryptocurrencies. But I think there has been one or two. There's one they keep saying no. The SEC keeps saying no in America, but there may be one who's finally got through. And I think there may be one in Cyprus or something. I'll look it up and send you the details. But that would be your best option for the moment.
Thank you very much. I'm very tempted because I learned today that on my ISA, I actually got a return of £17.12 interest.
Yes, for the year, yeah. You're
so
lucky.
I think I need to be doing something different.
Oh dear, that's lovely.
Can I
yes,
just offer you something there, Muriel?
Yeah.
I took money. Now, this is not financial advice. You know, you have to do your own research. There's a risk, all the rest of it. I took money out of an ISA and I put it into some cryptocurrency and into some bullion, gold and silver bullion. It's another topic completely. But anyway, I chose those different assets, and it made more in 7 days than it had made in 12 months.
Wow.
You do have to know what you're doing. You know, you do have to know what you're doing.
Right. I haven't, Jonathan, I haven't forgotten your other point.
Good. I was just reminding you. But before that, perhaps Yeah, I don't know if anybody else is interested in the use of blockchain in real estate, but I've written a little note about it, a short paper, 5 or 6 pages or something, which I'd be very happy to send anybody if they're interested in real estate and the blockchain's impact on real estate. So if you could sort of, I can send it to you and you can send it out if you want, or whichever way it's easiest to do. But if anybody wants that, I'm happy to send it to them.
Yeah, no, lovely. Do get in contact with Jonathan directly on that. Of course, you're very welcome to do that. Jonathan, I haven't forgotten about your sponsored walk as well, so we'll come on to that in just a second. We have got a question. Michael's shared a really interesting point, which I'll just bring up for a second, which is about this TED Talk. Have you come across this, either of you?
I don't know that talk. No, sorry.
No,
Yeah.
I don't know either.
Yeah. So thank you, Michael, for sharing that. It's really appreciated.
Very interesting.
Yeah, no, exactly. So, right, in which case, what we'll do, Jonathan, if we come back to you for a moment, can you just tell us a little bit more about how people can use your exchange as well, with all, of course, with all the usual caveats, but I'm sure you've looked at that very thoroughly. And also, I'll put in the feed here about your sponsored walk as well. So, but as we come on to that in just a second. Just a bit more about the use of your platform and how people can get started on that. And also, I think you've got 2 ways of trading on your platform as well, haven't you?
Yes. Well, more than 2, but 2 basic ways. Yeah. So I hope, fingers crossed, that it's easy, because it's designed to be easy. So you just need to go onto yanda.io and you need to open an account and deposit some money. You don't need to deposit very much, but I would say it's probably not worth doing for less than £100. So I would say that is your starting point. Once you've done that, there are 2 ways that you can trade. You can either trade manually, which is just as it suggests, you buy bitcoins for your pounds or buy Ethereum, whatever you want to do, and then just hold it until it's the right time to sell and then sell it. I think it's more sensible for a beginner to use the automated trading facility, which is to go to that. You'll see something on the left called trading bots, and just go to set up a trading bot and choose which other currency you're interested in. And then there's a selection. If you're trading from pounds, there's probably a selection of about 30 currencies you can choose, some of which you'll never have heard of. And then just set up a bot by deciding how much profit you want to make. So at what point should it stop to lock in your profit, and where you want to set your stop loss in case things don't go according to plan. Now, I should say that over a 3-year period that the algorithms have been running, over 95% of all trading strategies have been profitable. So it's quite unlikely that you'll lose money. Some people manage to. I mean, I've even managed to lose money a couple of times, but then I have done thousands of strategies over the last 3 years. So, but generally speaking, you shouldn't lose money. And then just be patient for the bot to work. There's no point sitting watching it. You can get really entranced if you watch how the market's moving from second to second. You can will it to go up or something, but I wouldn't waste my time doing that. At least not beyond the first day. Just let the strategy work its magic, and then come back and check it the next day and see how it's done. And if it's showing a profit, then you probably close the strategy, take your profit, and start up another one. Or you can let it run. It's up to you. They will run on until they're told to stop, or until they reach the profit target that you've predetermined. I normally set 10% as my profit target, but I'm too impatient. I never wait for it to get there. I always stop it earlier and start a new one. It doesn't cost you anything just to do the basic trading like that. But we have got other options. The website offers predictions. You have to pay for those, and how much they cost depends what package you sign up for. But So there are predictions, sort of 1 day, 7 day, 1 month predictions of where the various currencies are going to go. Again, algorithmically created predictions. So the algorithms may or may not be right, but if you want to have a go at doing that, that's another way to do it. So there are various things you can do. There are also some tutorials on YouTube. So if you search Yanda on YouTube, you'll find tutorials explaining you how to do things and how the market works, etc. And other subjects of interest, like there's one for me on this blockchain in real estate I was talking about earlier. So if you're interested in that, there's a video on that as well. So there are a few up there. So that's how you do it.
You mentioned, I think it was sort of 5 different parameters you can set. If you've got someone who's a complete novice to this, is there almost like a set of default settings you can set the bot to?
Yes, there are defaults, yeah.
Yeah, and are there different defaults depending on your appetite for risk, for example?
Yeah, there is. I mean, the default setting for stop loss, I think from memory, is 25%. Actually, I can maybe check it on my my iPad while we're talking, but I think from memory it's 25%, which is fine. I generally just leave it at that because, as I say, I've never got anywhere near that, so it doesn't really matter. Let me have.
Rupert, just while we're waiting for Jonathan to add that, I've put a couple of comments in the Facebook feed. One is some YouTube, a YouTube clip that I recommend, which is all about decentralized finance. It's by a gentleman who runs an organization called Coin Bureau. He's actually called Guy, so he calls himself the Crypto Guy. He is really informative and very, very interesting. And he puts a lot of free content out about cryptocurrency. So if you want to educate yourself, he's a really interesting guy to follow. And also I put a link in for crypto.com for a wallet, which is the one that can go in and out of a credit card. So you can add your profit from a wallet into the crypto. You do need to be careful of how you accommodate tax for any profits you make, but that's your personal responsibility, I guess, to ensure that you're reporting any gains that you have for tax.
Right, lovely. I can see one of those links, so I can't see the second link. I can see the YouTube one. Is there a second one, do you say, you posted?
There's one further up, yeah. It's just before one of Michael's comments, yeah.
Oh, got it, yeah.
I've got them both, Rupert, if you need them as well.
Yeah. Obviously, these links will stay in the Facebook feed, so you can go to these afterwards, or YouTube feed. Muriel, sorry, Jonathan, did you say you've got that information?
Yes, it's just the take profits level, which is default, is 10%, and the stop loss is 25%. But it's a slider, so you can slide it up to 50 or down to 5 if you wanted to. So it's very, very simple to operate. And there's also a way of contacting. If for some reason you don't understand something, you can easily contact the team there to ask them how to do it. And there's a forum as well where people swap ideas and things. So it's quite friendly, and the people are quite friendly as well. And we're used to having people who don't know what they're doing as well as people who are quite expert. So it's designed to be accessible.
Yeah. No, thank you ever so much, Jonathan. I think you've. If I could, remember you sharing this one part. I've got the great pleasure of knowing Jonathan quite a while, but also. You had this horrible COVID a while back, didn't you? And I think you're still not long COVID a bit now. Poor Jonathan, I think, runs out of energy quite quickly, understandably. But we're very grateful for your contribution today. But you're also amazingly doing the sponsored walk, aren't you? Can you tell us a bit about that as well?
Yeah, there's a wonderful little charity in just outside Guildford in Surrey called Woodlarks. And Woodlarks is a holiday camp for severely disabled children. And generally speaking, it's open from the late spring to the late summer to provide swimming lessons and all sorts of activities for severely disabled children and their carers. Now, it hasn't been able to open last year because of COVID. And so they're in a little bit of financial difficulty. And so a group of city people, including myself, are going to do a sponsored walk on the 30th of May. And we're going to attempt to walk to Woodlarks Camp from Winchester, which is 34 miles. And I've been doing 1 or 2 training walks. I did 10 miles yesterday, and that almost killed me. So I'm going to have to train hard to get up to being able to finish 34 miles by just over a month from now. So,
Oh, wow.
but anyway, we're endeavouring to raise £50,000 in total. And we're about a quarter of the way there so far. And there's a Virgin Money account, which is Woodlarks is a registered charity, so you get your tax relief and everything, and you can do the what do they call that? The what do you call it when the gift aid? Thank you, Damien. Yes, you can do the gift aid and everything. But anybody who can contribute anything, any contribution will be gratefully received, no matter how small. We can't
Jonathan,
take
could you just
cryptos,
spell it out
unfortunately.
for us, please?
Yeah, I put a Woodlarks is
Also the link, yeah.
like the word wood and larks, but one word. So it's woodlarks.org.uk is the website if you want to have a look at the camp and see the children. And yeah, the link is there on the screen, the Virgin Money link. So.
Lovely. Well, thank you very much for that. Anyway, I think it's been a great session today. So it's been a bit of a bit of a longer session today, but I think there's lots of questions coming in. And Jonathan, a very big question. Thank you to you. Obviously, stay on afterwards, and Damon, stay on as well. Lovely for you to do so. And very grateful for you joining today. Do get in contact with Jonathan if you've got any questions, or Damien for that matter. And look forward to seeing you all next week, next Thursday at the usual time at 4:55 or 5 o'clock British Summer Time. In the meantime, have a great week, and thank you very much for joining us. You take care, everyone. Yeah, thank you.
Bye, everyone. Bye.
Ciao.
Bye.